Hello traders and welcome to our daily summary for February 3rd. Did you saw that picture at the beginning? Yeah, that's the theme. Today we had some significant moves that makes us think of alternatives, and speaking of alternatives, I mean long-term alternatives. Whether this is the correct way to view the markets, I cannot be sure for now. However, the probabilities are that those counts that I'm about to show you right now are now highly probable. I've written on the reports of the website of Snail Trading several times that there is a potential of such a view for the markets, which suggests a long-term bearish market and a big crisis coming, a big global crisis coming. And today's moves open the path for such moves. A few minutes or hours ago, I posted this scenario for the euro, which is a bullish scenario, however not a very bullish, and I count here this upside move as a wave A and this as a triangle for wave B, meaning we have a wave C to the upside for wave 4. But this is actually the gray scenario that I saw you here on this daily chart, which suggests that this will become an ending diagonal to the downside, because if prices move a little higher from here, they will enter the territory of wave 1, and therefore we should count these moves as ABCs in order to give another another fifth wave to the downside as an ABC to complete the pattern. And of course there are too many scenarios here, because it could also be that we have 1, 2, and here to have 1, 2, 1, 2, and much lower prices, but I seriously doubt that this is the case. There is also the possibility that prices will stall around these levels, so that will not enter the territory of wave 1, which lies at 1.10864, and they will reverse lower from here. But given the internals of the current bounce, I really don't believe that is about to finish anytime soon. So looking also at other assets, other securities, I see bullish patterns in many other pairs, and also bearish patterns on stock markets, and in general bearish dollar theme, which suggests that maybe we're about to experience a dollar bear market from now on. So let's begin with the euro, and as you can see, I will begin from the weekly chart, and you can see here how I count this move to the downside here as a complete 5-wave move to the downside, and we have 1, 2, and from here we go much higher. To begin with, prices, as you can see, have broken above the 21 moving average, who was providing strong resistance for some time now. Those are a lot of weeks, I didn't count them, but prices have now created a very long candle, and I don't believe that we will have a reversal from here, although we had several other candles like that in the past here, as you can see, that were reversed. But I believe that as the momentum now suggests that we are clearly bullish on the weekly chart, and a close today above the 55 week SMA will be a definite bullish signal for the long term. If we move to the daily chart, we see that I left on the chart only the let's call it super bullish scenario, which suggests that we have a wave 1 up here and then a complex correction for wave 2. The momentum has broken, prices are still pushing to the upside. Prices have moved above all SMAs here, and they're testing this trend line that connects these peaks here. Prices are trying to move above them, and I believe that they will succeed. The momentum is very strong, and then we will have the resistance of this channel, the lower boundaries of this channel. However, if prices reach this level, we will already enter territory of this wave, and thus this wave cannot be wave 1. And if it's not wave 1, we are moving to much higher levels in the coming weeks and months. Let's go to the Australian dollar. The situation is the same. The rebound simply does not stop. We have overlapping waves here, which and a break above this trend line. Prices have 1, 2, 3, 4 periods of 4 hours, all bullish, each one of them with a bigger candle, suggesting that the bulls are here for the Australian dollar, and I don't believe that they are about to reverse anytime soon. In a couple of pips, the approximately 40 pips, we are going to enter the territory of wave 1, and thus we cannot talk for a wave 2 here. Prices continue to the upside, and if we go to the daily chart, we can see how the 21 period SMA has provided support here. Prices are testing the 55 period, the 55-day SMA, and they're testing this trend line from below, which in the lower time frame seems to be already broken. And we have a break in the momentum here, a break of this bearish trend line on the momentum, which was tested after that and continues to the upside. All of them very bullish signals, and also this candle, if it continues until the end of the day, it will be the biggest single day gain for the Australian dollar for some time, and thus I believe that this was the whole fifth wave that ended a long-term bear market. And as we can see what's happening here on the weekly chart, this concluded wave C of Y of this WXY and an X of this W, and we're moving to much higher levels in the coming sessions. Prices are now testing the 21-week SMA, and they will break it. The momentum is simply very strong. Let's move to the New Zealand dollar. The situation is the same. Here, however, if we look at the weekly chart, we see that after the decline, that didn't create a new low, and thus I believe that wave C has already finished some months ago here. And what is happening here on the daily chart, here we have the completed downside, and then we have 1, 2, 1, 2, and this was actually not the beginning of another bearish trend, but actually was a very prolonged correction, and that goes very well with the fact that wave 2 here was very deep to be true. And I believe that this count is the correct one, and prices will break this trend line to the upside. They have already broken above all SMAs. The 21 week daily, the 21-day SMA has provided support here on the attempt to move lower. Also yesterday we had a close above it. Prices returned to close above it, and now prices are breaking the other two SMAs, facing resistance of this trend line. And I believe that they will continue as the momentum is very strong. And if we look at the 4-hour chart, we see how prices are testing this trend line, and this correction is now finished, and I believe that from here we will have a break in the coming hours, as the RSI is breaking above the um, the overbought threshold, suggesting that the momentum is bullish and very strong. Let's see the pound. We talked about the pound some time ago, that this level, the weekly level here, was a multi-decade support for the British pound, and the reaction was very sharp. We see this weekly candle here after two dodges of 2 weeks of indecision, how the markets actually decided how to move. And we have, of course, tomorrow the interest rate event for the Bank of England, but I don't believe that it will be a game changer, even if the Bank of England does not increase rates, which I strongly believe that they will, sending the pound even higher. I believe that the reaction to the downside, if any, will be very, very small, and it will not invalidate the bullishness of the pair. We see here the divergence that was confirmed here on the reversal exactly at the oversold level, and now it is making a bullish cross with the 9-period SMA, suggesting more upside is coming. We can count 5 waves to the downside, and a stop near the wave A here for the wave C, and near the equality level of those two waves. And I believe that pound is moving to much higher levels in the coming months. I don't know if it would be also years. On the 4-hour chart, we see how prolonged was this wave C compared to wave A, and that made us be a little concerned about the correctness of the count, but the reaction is very strong and suggests that this count is correct. Also, those Fibonacci levels, we had several reactions here, and inability of the prices to move below here, then support, breaking above the two SMAs, having resistance at the 144 SMA 2, and a decisive break above it. Prices are moving to the lower boundaries of this channel, and eventually they will break above it and continue to the upside. Also, we had last week, I believe, I don't remember correctly, altered our primary scenario for the Canadian dollar. It posted a rebound here, but prices were rejected near the 55 period SMA, who has a very steep slope to the downside, and prices fell sharply from there. We can count 5 waves until here, and this move here is in 3 waves, so I believe that we will see now a third wave that will move prices to much lower levels immediately. Also, this is correlated to our scenario for oil that I will show you in a minute. But let's see firstly the daily chart here on the Canadian dollar. We see how prices reacted at those Fibonacci levels. There was a reaction to the 21-day SMA with a bounce here, broken below. Now we're testing the 55 period SMA, and I believe that since we are in third wave according to the count, there will be no problem at all breaking below this 55th day SMA, moving towards the level of at first the level of 144-day SMA, which is currently at 134 figure. We see the momentum, how it tried to move above the 9-period SMA, and it was rejected, continued to the downside. The momentum is very bearish at the current point, and if we look at the weekly chart, we see that as we talked, as I wrote on my last weekly report on the Canadian dollar at the Snail Trading website, this is a dark cloud pattern which was confirmed by the second week candle, bearish candle, and now we will have a third adding to that confirmation of this super strong bearish pattern here. Also momentum divergence here, and a cross exactly at the overbought threshold of the 14 period RSI. All of the signals are bearish, and everything suggests that prices are moving to much lower levels in the coming sessions. I don't see, I mean, there are alternatives, but to my view, they are becoming, with every next decline, they are becoming less and less probable. Let's go directly to oil prices here, and beginning from the weekly chart, we can see how this move from here we counted as wave A, and this is wave B, and we expected 5 waves to the downside from the top here, and prices have now reversed to test this trend line, which provides resistance for now. But the momentum is trying to make a bullish reversal here, and eventually prices will break above this trend line, opening the path to much higher levels in the coming weeks and months. On the daily chart, we can see how this pattern is about to form here, and prices, although they dropped sharply after the rebound below the 21-day SMA, they are now trying to push again and move above it, and a close above the 21-day SMA will be a bullish signal. I also posted an update today in the morning about a negative divergence that existed here on the RSI, or the 14 period RSI on the 4-hour chart. Here, as we can see, prices didn't make a lower low, but the momentum did a much lower low, and here we have a bullish cross with the 9 period SMA of the RSI. And if I extend this trend line here, we can see how it now provides again resistance together with the SMAs that are all coming very near to each other, and that suggests that we will soon have a rebound here above these levels, and actually oil will say goodbye to this bear market. The count is with regard to Elliott Wave rules is correct, as I count it right now. Of course, I don't want to be I don't want to say that there is no alternative. Of course there are alternatives, and prices can continue to the downside, but the count that I present you are the count that I see as more probable at the current point. Let's see now the Swiss franc, another game changer here today. This was the trade of the year for as I said in snail trading, and I expected this pair to continue to around this level to the upside. However, this drop today has invalidated some patterns, and thus I now believe that this wave C was actually a truncated wave C at an important top here, and prices will move to the downside. We need a break of the momentum here to confirm this, but everything points to the fact that it will happen, And on the daily chart we see that prices have moved, they have broken this trend line. They didn't close already, however the momentum is much bigger, and even if prices return to close above it, if the rebound is not very sharp, of course, which I believe it won't be, the break in the momentum will remain, and thus the bearish alternative became primary. This decline, which we counted as a three-wave, sometimes is difficult to say whether it is a five-wave move or a three-wave move, because first, the data that I have at my disposal is not the best one, and second, it's just sometimes very tricky to count waves. And if this count is correct, prices will move to new lows in the coming months. Looking at the 4-hour chart, we see how I count this now as 1, 2, and an ending diagonal here for wave 1, and then W, X, and Y. And the main reason is the break here, this big candle here that is breaking below the SMAs, and the momentum is getting very bearish. Also, everything looks like that prices will move below this level, and that would be a confirmation of a continuation of the downtrend. I'm a little early here to signal a bear market, but I see it as very probable. I'm not gonna take action. I'm not gonna trade for now based on those expectations, because there are no confirmations on most of them. But we should keep in mind the potential of existing such counts in order not to buy every dip, but rather the best strategy may be to sell the rebounds here. And I'm gonna move now to Japanese yen, where the pattern is even more visible. Let's start. I'm not gonna talk about this candle here, those candles. I'm not okay. Let's move to the weekly chart, and we see how this channel, which I have adjusted it several times to allow for the rebound, I reverted it to the classical way, connecting wave 2, and here the wave B that I counted, and I have changed the wave 3 and 4 to allow for a complete wave C to this level here. And the important here is that when the momentum tried to move above this channel that I have written on the report several times, it didn't actually manage and reverse sharply lower, and it is about to again make a bearish cross with the 9-period SMA suggesting that it is moving lower. And if it moves lower, prices will that means that prices are actually targeting this level here. And if prices actually fell so deep, they will enter territory of this wave 1, and it will be at least a very deep decline, if not the beginning of a much bigger downtrend, which I believe that it is starting. The reaction to this trend line and this pattern that it is about to form, we see here, as you can see, if the candle closes like that, this is a dark cloud pattern, and we need another bearish candle to confirm the pattern. And if this is completed, we're looking to much lower levels. On the daily chart, we see how prices didn't manage to the rally was not sustainable above the 55 and 144 SMAs, and a reversal occurred immediately, moving below all SMAs. And also we have a bearish cross in the momentum indicator here. What is even more important, however, is that this decline, as we can see it better on the 4-hour chart, reversed prices below this level, which was the strongest support of the recent days, and it held it very well prior to the negative rates policy of Bank of Japan, and the fact that prices reversed and moved below this level suggests that the policy is not enough to keep the pair from falling, and this is a very bad signal. The fact that price erased the effect of the central bank event is a very bad signal overall. And of course there are several counts. It was a little fast for me to count here the correct way that it's falling. We also have the possibility of a leading diagonal here, this to be wave 4 or some other degree, but I will examine it in much detail during the weekend, and the next report will be in much more detail. The purpose of this video is to give you an early signal about the possibility of a bear market unfolding. Let's see now the stock markets, and first we'll look at the S&P. We see how prices dropped below the SMAs. Here it provided strong resistance, as you can see those big wicks here, and after prices moved below the 55 period SMA finally, the decline was sharp, and although they are erasing price are erasing most of the decline right now, it is only, I believe, a correction to the upside before continuing to the downside. Prices have reached a very strong support level, which lies around 1860 here, and that's why the rebound happened. But the momentum is still bearish. The rebound here was rejected by the 9-period SMA, and prices continued lower, and that is what is about to happen, I believe, in the coming hours and sessions. If we look on the daily chart, this is an attempt to count the decline. This wave 1 is a little tricky, but going into much lower time frames like 1 minute, it is possible to count this as a leading diagonal, this is a correction for wave 2, and we have a wave 4 correction somewhere in here, which is not visible on the daily chart, and then an ABC for wave 2, and from here we're moving lower to much lower levels on the weekly chart. This is the most important chart here, and everything points to the fact that this weekly candle will not be reversed unless we have something very strong from the NFP event on Friday, which I don't believe that this will happen. I will talk about it in a while. The rejection at the 144 week SMA and the lower boundaries of the channel after it was tested here 2 times, then it was broken, and then prices reversed here to test it. They moved above it for a fake break above, and then they reversed lower. This is also an interesting candlestick pattern, a bit if it closes like that, an interesting bearish pattern, and that suggests that unfortunately this whole bull market that is not visible on the chart, I don't have so much price data, but I can see it on other sources. Actually, this is part of a wave 4 of a super cycle degree, and we're about to see a very large decline, probably moving towards the levels of the 2008 crisis to complete a wave 4 there before we have the actual bull market after that. But it's going to take at least a year for that, or even more, I don't know. And if this count is correct, I don't know, we still see, we may see a lot of companies closing. I mean, I'm talking about bankruptcies and such stuff, and although I don't want this to happen, this is the technical picture at the current point. And if we look at the DAX, the situation is no different. On the weekly chart, we start from there. We have the same rejection only the DAX closed above the channel with a dodgy indecision here from investors, and then decision. And if the decision is to the downside, you understand that this theme is about to continue. And as you can see on the weekly chart here, the next possible level of a stop is at 8,300, and I don't believe that prices will stop there, because if this is a decline, if this is a wave 4, it will be very near to wave 1, which should be here as a wave 1, and I don't believe that this will happen. I believe that prices are moving to much lower levels. On the daily chart, we have the same situation, a break below a trend line that was tested, and then we broke above, provided support, and then this SMA, the daily 21 day SMA, actually provided strong resistance. Prices didn't manage to move above it, and they reacted, investors reacted with another sell-off. Prices are now clearly below the trend line. I don't see any potential for returning anytime soon, and we have also a bearish cross here. Yes, and the picture looks ugly, at least. On the 4-hour chart, I made a fast counting here, which may be incorrect. I will have to re-examine it during the weekend for the weekly reports of the website. But again, at least in the short term, we see how this 55 period SMA that was providing support here was broken here after these little candles here, and the 21 period SMA providing resistance here. The rebound here was rejected, and then another 2 times were rejected, and then the decision came to the downside. The downside move here is in 5 waves. We have 3 waves to the upside and another 5 here. Everything suggests that we have a correction around here, probably already in the making, and we continue to the downside from here. A very bearish view on all the pairs is what I presented you. Of course, it is those are preliminary counts, but the fact that upside today on the euro and also on New Zealand dollar and the Australian dollar created those patterns that we should not ignore. We will monitor how the markets will react on the NFP event in 2 days, on Friday, and also tomorrow on the Super Thursday for the Bank of England, which I believe that they will raise rates, sending the pound higher. And but my expectations on Friday is that we have two alternatives. The first one is that we will have a statement from Fed that will say that they're reconsidering their intentions to further cut rates, which will signal a strong bear market for the dollar, or they will they will try to avoid talking about it like they did in the previous event, which in these circumstances in a bear market it couldn't be a base for investors to go and buy the instrument strongly to create a rebound. So that's all. Again, I'm telling you, all of these counts are preliminary, and I will re-examine them in the coming days and after the important events of tomorrow from Bank of England and from the Federal Reserve on Friday, and I will prepare more detailed reports during the weekend. Thank you for watching, and have a nice day.